Right. Hi, everyone. It was a pleasure seeing you a bit earlier. We're going to kick off now the third panel within today's event, whose topic is digital payments and customer journey. So in order to be able to focus on the discussion part itself, we will kickstart directly with the presentations. And our first guest today is Yordan Stoyanov, who will tell us a little bit more about PayMan Group. Jordan?
Thank you. Could I ask you to load the presentation? Just one sentence about PayMan Group. PayMan Group is a fintech company. It provides technological solutions and consultancy, and by consultancy I mean everything starting from legal, marketing, business model, pricing, of course, technical, strategy, etc., to fintechs. We are currently undergoing a licensing procedure together with the Bulgarian National Bank, so that we can will be able to also offer direct business to our customers and not only advisory to our competitors. Now, I was asked to prepare a little bit a broader picture about what's going on, and due to on the financial sector, and due to the fact that you have just finished lunch, I decided to keep it short, so just 2 slides. One big disclaimer: you will see a little bit of data, a little bit of conclusions. All of these data and conclusions have been elaborated together with some of the greatest minds on the European financial sector. There were also a broad table discussion where also Daniel took part from the set of founders, some of the authors of the PSD2, some of the CEOs of the larger technological companies, some CEOs of the largest banks in Europe took place. And what I'm going to present you is pretty much an outcome of all of this discussion synthesized into really two major slides. The first one being this one. Sorry. Okay, so the main idea is to discuss the successful business models, and all of the participants agreed that there are 3 main vectors that should be discussed, 3 main vectors for competition, if you put, of course, the pricing aside. The first one is customer centricity. What does it mean? It means the extent to which any organization in the financial industry would like actually to face their end customers. And here there are 2 extremes. On one side, we have the infrastructure players who are super focused on costs, efficiencies, and processes. And on the other side, we have the customer experience players who are focused on customer journey and user experience. Traditional banks are naturally leaning a little bit more towards the infrastructure players, and that's inherited first by of course, the stagnation related to the financial crisis some 13, 14 years ago. Second, because there are opportunities for their shareholders to invest their money elsewhere. So they're pressing for efficiency, they're pressing for cost cutting. Yet the banks understood that this will not bring their profits up. They're starting to lose market share, so they're starting to lean toward the customer experience, and this is pretty much happening today. The fintechs, on the other hand, understood that there is a gap there and started to develop a very customer-centric proposals. However, they also understood that only developing customer journeys will not derive their profits to the sky, so they started again to lean towards the infrastructure. I would like to outline that there is a gap you can see behind the traditional bank and the infrastructure player, which I will outline in a second why it is important to discuss. Second vector is the degree of customization. The extremes here are one size fits all approach, and the other extreme is super tailored solutions for the customers. Here there is a great consensus between the traditional banks and the fintechs, and I believe it was natural, but now the traditional banks are offering pretty much one-size-fits-all approach, no customizations. You end up in the bank and they don't care pretty much about you. They offer you the standard mortgage loan or the super non-standard mortgage loan, but still standard. Where the fintechs, on the other end, they are happy to customize the product for you. And there is a natural movement from the super standardized toward the super customized, and of course, fintechs from super customized to super standardized. The third vector, this is the portfolio width. Banks being the historically the only players on the market, they have pretty much everything. But now, so they offer the full portfolio. Now, fintechs, they start from pretty much niche products, but they understand that they cannot increase profitability by just offering one or two products. So they start to raise, they start to add further and additional products, and they start to increase their portfolio. However, there is a gap that you can see also here that I would like to ask you to think just 1 second and discuss later on in the panel. Who do you think can fill in this gap? I have an idea. I'll share with you later. Second slide. Some conclusions, probably. Can you switch the slides for me? Sorry. Just the third one? Yep. No, this is the fourth one. This is the third one. Thank you. So, what are the conclusions? First, start looking at the picture in the center. That's a traditional bank. It has 3 layers. So it has the client-facing means. This is like online channels, branches, mobile advisors, whatever you can imagine. Then you have the product factories. Name them, they're all there. Payments, mortgage lending, fast lending, everything. And then you have on the base layer, you have actually the infrastructure. And by infrastructure, I don't mean just the hardware laying down. There is the hardware, there is the software there. There is also the back office. There are the bricks in the branches. There is pretty much everything that makes your product running. So what happens? From the previous slides, we easily identified that one player can hardly compete on all the vectors. So they need specialization. And from this particular picture, you can see that there always already some specialization going on. There is a client-facing specialization coming from the platform players. Platform players are, for example, Revolut. They started offering super simple services, but extended portfolio with the help of course, affiliates, partners, etc., etc. This, in my opinion, brings a lot of risk from managing a complex relationship with third parties. It's not like having all of this in-house so that you can pretty much align the KPIs of your entire organization. There is another interesting development, and that is the infrastructure players. There are already companies that are offering only infrastructure, and these are quite successful companies. They are offering services for specialized units, for example, for the payments or for mortgage lending, where you can pretty much have almost zero infrastructure cost on your balance sheet. Everything will be on the balance sheet of these guys. And they can offer much greater, let's say, efficiency, much greater services at much lower costs. There is one example I just want to share. There is a company called Nexi. 5, 6, 7 years ago, it was a simple startup. Just 3 months ago, they acquired the entire card acquiring and issuing business of the 2 largest banks in Italy. This is like 80% of the acquiring and issuing business in Italy. So they purchased them, and they're going to manage this for themselves. In my opinion, this, of course, it's open for discussion. This poses a little bit of risk because these are going to be the winners of the future. Yeah, it's very strange. Those guys that are not facing the customer are going to be the winners. But imagine that everybody is running away from infrastructure. And when there is nobody in the infrastructure becomes everything. So they can dictate the pricing. They can dictate the quality from there onwards. What about GAFA? GAFA, this is Google, Apple, Facebook, Alibaba, and whomever else. Can you go to the previous slide, please? Not the last one, the previous one. I think GAFA will perfectly fit into this lower vector, where nobody wants to go too much into the mass portfolio, and the banks do not want to go too much into the niche products. I think there is a big opportunity for GAFA because they have the money, they have the knowledge, they can easily acquire if they don't have it, and I believe it's going to be them that will take this particular piece of the market.
They also have regulators on their asses, which is a horrible thing. But however, it's particularly interesting what you mentioned right now because in Brussels, it's been for 2 years already that Facebook have been looking for a financial lobbyist. And this is all quite telling about who's going to fill this gap. I actually agree with you. However, the regulatory challenges in front of them are significant. But we will jump in on this one.
I pretty much finished with the presentation. I like how we managed to switch it directly to the discussion. In my opinion, they have the money to face all of the regulatory challenges because the regulatory challenges are having standards. You need these competences, these investments, and then you're in. They cannot pretty much be stopped like that. And they have the money and they have the data to also invest heavily in marketing. So this piece can be pretty much filled in by nobody but them, in my opinion.
Absolutely. Well, we've already seen this case in Asia where you can use WhatsApp, for instance, for financial services and make payments via that. However, in Europe and the US, it's much more complicated than that, especially when it comes to these sort of differences between supranational legislation and national legislation. How is this going to play out? So what do you guys think about the combination of the synergy, we love this word, between banks and fintech? Have we seen a lot of that in the past couple of years? I'm opening up the discussion just briefly to the entire panel so we can roll out into our next topic. Have we seen a lot of that? Well, one example that springs to mind is Santander, who bought eBerry in Latin America for a couple of $100 million. And it is a pretty good example of certain fintechs' ambitions, how they're going to manage their P&L, basically, by being acquired by a huge player. However, there are other players, such as Nubank, or Revolut, who continue to work with a particularly specific business model. So we have a couple of verticals there. First, we focus on mass adoption via 1 or 2 services. And then the idea is that you're going to continue scaling your customers in order to upscale them, basically. To be fair, it's very difficult to tell if this particular business model is going to be successful because no one's ever done it so far, and to this extent. I myself am a fan.
I believe that PSD3, which is coming, will be answering a couple of those questions, and this open banking will surely extend so that they can offer, if you see the second vector. So this tango, or this dance between the traditional banks and fintechs, can easily be enabled by the open banking. The traditional bank is offering their product from here to here, but then this little piece of customization is easily, through open banking, fine-tuned by the need of that particular customer with the help of a smaller company. Why not? I think that's the future of it. They need to bond.
I agree with that because, for instance, the only reason why fintechs can afford such a business model is the fact that they're not regulated, and they're not regulated because they're not responsible for liquidity. Banks, as traditional players, their core service is with regards to liquidity, to have a balance between borrowers and lenders. This is something that fintechs, they do not want to have because it comes at a huge cost. Obviously, it's going to slow them down, it's going to come up with all those legacy system issues and things like that. On the other hand, right now we've got numerous examples of how fintechs can successfully collaborate with even particularly good CRMs. We mentioned earlier with you in a private discussion about this British/Bulgarian CRM MyClarity, who, you know, a couple of years back, the main thing was, with regards to fintechs, was they're not making money. For banks, it was they have legacy systems. I think both have now have evolved from those topics. Legacy systems are no longer a problem for banks. Well, at least for those banks that do not want to have problems with legacy systems, because one of the key reasons why fintechs are able to upscale clients very successfully and they rely on such a business model is the fact that they can target their customer base incredibly effectively. And in order to do that, you need to restructure your internal database. So if we've got one bank, like any huge bank, any bank has a huge database. However, if that data is linearly referenced, it is static, which means that I cannot target selectively via a couple of filters users I want to market something to or to make some sort of conclusions. While right now, there are these CRM solutions that enable the transition from a linearly referenced data to dynamic segmentation. Dynamic segmentation essentially means that if I'm UniCredit, I will be able to, with dynamic segmentation, I will be able to target every single customer in Sofia who is a female between 25 and 35 and bought a Starbucks on a Sunday morning. This allows for a particularly elaborate structure that, allows the bank to communicate better with various clients. And I think the legacy systems are no longer a tech issue for banks. It is a matter of a mindset, because we can see huge progress in that regard. And we'll come back to this. But now talking about all the excitement fintech brings to mind, we'll continue our discussion with Detelina Momčeva, who represents the Settle company here in Bulgaria. It's a pleasure to have you. Guys, can we please load up Detelina's presentation? Thank you.
Thank you, and I'm not sure how smooth the transition will be towards the slides that I have presented and the topic that just started, but I think it's important to mention the collaboration between fintechs and banks that is present in Scandinavia, because it's a model which is, how to say, not so often tackled in any other markets and in any other circumstances and environments. And it's interesting why, though, because whether it's a culture or mindset or the financial infrastructure in those markets and the financial awareness between the customers there, but I'm really hoping and open to see whether other European or world markets will grow to that extent to collaborate in the same extent as the banks in Norway, Denmark, and Sweden are collaborating with the fintechs there and the successful models that they have brought together. And can I have the pointer? Or
Yep. Here you go.
Thank you. So what I've prepared is just a summary, a bit of a macro trend, how things are developing around the world. And a few of the examples that I just mentioned with mobile pay, Vipps and Swish, which are a beautiful examples of how fintechs can collaborate with banks without interfering each other or contradicting each other. A couple of other examples for such collaboration are Zelle and to a certain extent Venmo in the United States as well. And what these few examples, these few major purely mobile payment companies present are that they managed to become some sort of a monopoly, even though monopoly is probably not the right word for that, but let's say to dominate the markets with regards to mobile payments in the certain jurisdictions where they operate. And even though most of the focus, especially on our grounds, is towards Revolut as a major player, we are, how to say, we owe some attention to these companies and to the models that they represent in the results that they bring, because right now there are like more than 1.5 billion people using just this, the services of these just few companies around. And there is a huge potential to grow, as we're going to see on the next slide. some of the data from last year on how the mobile payments developed globally and how much more and more people are referring to mobile payments in terms of any sort of not just P2P and not just purchases, but basically any sort of money movement between different counterparties. And the trends are definitely into a positive direction. So these numbers are going to go higher and higher in the next couple of years. What is important to mention here is the e-commerce as a building block in this infrastructure between the fintechs, the banking, basically how the financial services are integrated in becoming more and more actually a part of the e-commerce segment, again globally, not just in certain regions. And how much more and more users are referring to a mobile payment solutions instead of the standard card and VPOS and cash on delivery and bank transfers and all these things from, I would say, past or soon to be from the past. And what actually moved the industry, surprisingly, is on the first place is the P2P payment apps. It's often considered that in order to succeed on a specific market or a specific region, as a fintech provider or as a bank provider, you need to have a super large portfolio of different services, of different functionalities and things like that, when actually the main use of these tools which fintechs provide to the users is still the good old P2P. And the examples that I showed on the first slide with Zelle, for example, or with Venmo and Alipay are a beautiful example for that. Another representation of how the industry moves and actually what are the drivers for that are the mobile wallets, which doubled in transactions after March 2020, obviously due to the COVID crisis, but maybe it was just a good trigger for that. And once again mentioning the e-commerce and the cross-border payments, which are again a major factor for this. I'm going to stop here now, so you can continue with the rest of the participants in the panel discussion. And when we go towards the user journey in more details, I will refer to the next slides.
Perfect, thank you. So just to intro our next speaker, we've got Marina Shiderof, who is here to tell us a little bit more how exactly you build a good customer journey, no matter if you're a bank or a fintech company. And I find this topic particularly interesting because I think it's a key selling point for all successful mobile wallets or what have you. Marina, it's a pleasure to have you.
Thank you. My name is Marina Shidероф. Maybe I need to switch on this. Okay, can you hear me better? Yeah. So my name is Marina Shidероф, and I'm here to talk about my favorite topic today, customer experience and customer happiness, and how to achieve this even in not so interesting matter as banking, money, transferring money, and things like that. That's why, because I'm really happy to be here today, my topic is also happy. Easy banking is a happy banking. How it all starts. That's a global statistics, global metrics about how the people are interacting and paying globally. Now I feel a little bit like the ladies on the TV and talking about vaccination. The leading countries in these statistics are the Iceland, Denmark, Norway, Finland, the Netherlands, Sweden, and the United Kingdom. These users are educated, they're ready, they're using lots of fintech applications and platforms, they're cashless societies, and this trend is evolving every day. Where are we in these statistics? Unfortunately, like the vaccinations, we keep only 13%. and this is quite sad, I would say. So why our users still unsure of going digital with their finances, or why we are not using fintech applications and are still loving cash payments? There are two main reasons for that, and this is the technical literacy and the bad overall customer experience. I would pay attention on the bad technical literacy because we were talking about that in the previous panel when we were discussing that people are not educated, that they're not used to use this kind of applications at platforms. They don't have the habits, and this is so sad. And the second reason, the overall bad customer experience. This means that the companies, especially the product companies, are not able to build these digital products and not on the level that the global companies are doing that. So can we catch up with the digital wave? Yes, I do believe we are on the right way, we are on the right track. There are great Bulgarian companies, and I think the trend is positive. And also because there is a straight process to achieve this, and it's a good customer experience, it's improving the technical literacy, and this leads to building credibility and trust. I do believe we are in the right direction, and if we take those issues, we make it work for us. But first, what is CX? I really would like to make this presentation useful. That's why it's full with practical advices and checklists. And I would like to ask you the following questions. Are you blown away by the performance of the product you're using? Do you enjoy using the product? Does this product help you? Is this product catering to all your current needs? Do you trust the company behind this product? Does the brand behind the product represent your values? Most of the companies are not paying attention to these questions. They don't care, or they just don't put in front these questions in front of them, their teams, and also in front of their users. And if the answer is yes to these questions, then you have had an impeccable customer experience, so there is no problem, you can go to drink coffee. But if the answer is no, then the bad customer experience is one of the reasons you're losing the majority of your customers, of your users. So, one of my favorite quotes: customer experience is the sum of all the iterations that a customer has with an organization over the life of the relationship with the company or with the brand. Think about what are the touch points, how do you interact with the customers, and how long is the life cycle, and what do you do for these customers during the life cycle. So, this is one of also my secret weapons. This is a CX checklist. Or, I don't see this very good, so I'll turn here. So, you should keep full digital accessibility, variety of payment options, easy to access customer service, personalized reminders, fast rollout of features of improvements, collect customer feedback, easy to do business with, chatbots, multiple deliverables, incredible user experience, and this is all the collection of the useful screens and the good user flows and journeys in one product. This is to keep a great dashboard, to keep the right flows, to have all this functionality that is useful and that makes the user feels good. So, what your customers expect from your banking experience? Innovative solutions so they can interact whenever, wherever, and however they like. This is a new trend, and also during the pandemic, it's growing, it's evolving, because there are kind of new type of users. and they're selfish. They would like to have everything personalized for them. That's why they want to have immediate solutions of their problems. They want to have recognition for loyalty, loyal bank customers made 10 positive comments for every negative one, protection from satisfaction that may advertisively affect their finances, communication enabled across of their preferred channels and devices, functionality, apps and systems that work well, and a low efficient money management. Just for you to know, these were the trends even before COVID, but they're not so strong, and just the cashless society were using them, and they were paying attention on them. Now it's really strong, and this is kind of a must list. If you don't have all this stuff, you may start losing customers. So, back to my topic, happiness and making everything easy. What your customers expect from their digital experience. They expect to be easy, to be fast, to be simple, to be personalized, to be transparent, and to be secure. And basically, this reflects to your values. This should be the mirror of your values and what your brand stands for. Easy banking for complicated lives. We can make at least this part easy and to make fun out of it. So there is a list of what the great customer experience consists. It's all about research, taking care about your target audiences, markets, user researches, user journeys, user mapping, then taking care about the great user UX, UI. So all the flows and all the screens should be packed in a great prototypes, and then you should test all these prototypes with the clients. So I heard in the previous panel that a company is testing in the company itself because they have many teams and stuff like that. I don't think that's the right approach because the users are outside. They're all around the globe, and with every day we're becoming more and more global. So the right testing and the right defining the right target groups is crucial for your successful user experience and presence. Then product, service, and strategy. Of course, if there is no good strategy and not accurate business goals, then there is no product at all. There is no business success. Digital marketing, because I do believe that there are so many great products on the market, but their market is so bad that the people and the users just cannot understand how beautiful they are, and the opposite. People are making the big mistake that they have a weak product with bad features, but if we boost with marketing and sales, and then we can make it, many sales and great campaigns, then we can take the users. No, we cannot. We can lie somebody just for one deal, and that's it. Then the users will never come back, and that's not the idea of the perfect customer experience. So thank you. This was my presentation. Keep calm and bank on.
And always test your products. Right, and finally, we're going to hear from Pьотр Narčik, who is all the way here from Poland. He's going to tell us a little bit more about customer identification and authentication. And after that, we will jump on the lengthier discussion, I should hope. Pьотr, it's a pleasure to have you.
Thank you. May I ask for my presentation, please? So, yes, I'm from OneSpan, and in OneSpan, what we do in OneSpan, we protect our customers' digital journeys against fraud. We mainly do this by establishing trust in customer IDs, their devices, and transactions. Can we go to the next? I can do this.
Yes.
Okay. So a few words about OneSpan and the history, because during the breaks when I had some chats with some of you, there was some confusion. So I will start a little bit about the history. So OneSpan was created, was established in the 90s, and originally the name was Vasco Data Security. So yeah, I see that yeah, some people waving your hands. So after years of mergers and acquisitions, a company decided to change the name to OneSpan. So we originally started as a company producing authentication solutions, mainly started with hardware tokens. Still, hardware tokens are present on the market, and used for some use cases and for some customer segments. But then when the market was evolving, technology was evolving, we're moving more to the software. We moved to the software tokens. Approximately 5 years ago, in 2015, a company acquired another company called Silanis, a leader in the digital signature solution. In 2018, we acquired Dealflow, who was a leader in identity verification. And afterwards, when the authentication solutions became one of the business lines, not the major one, but one of them, company decided to rebrand, and since that time, we are called OneSpan. We are a global company, approximately 800 employees in various locations, headquartered in Chicago, main offices in Brussels, Zurich, and Montreal. I'm based in Poland. We have very small office, just 2 people there, and I'm covering this part of Europe, so CE region and Baltics. The major products where we concentrate on are identity verification, authentication, fraud analysis, mobile security, and e-signature. It was mentioned here about customer experience. I think this is at the moment one of the key elements if we are talking about the digital customer journey. So when we talk about the customer journey, when we spoke with our customers, we identified 4 major elements which customers define as needs or as goals, and we decided to fulfill those elements. So definitely 2 of them are related to the business growth. So to grow the business, customers want to maximize, grow the business in the digital channels. And this actually is happening. COVID obviously helped really a lot to do so, although even the pre-COVID digital channels were developing very fast. The COVID situation forced to even those who were really reluctant to use the mobile banking had to start using mobile banking because branches were simply closed. So one thing is the business growth. The second thing, which is related to the business growth, is protection against fraud. The more business we have in a certain channel, there is a higher probability that the bad guys also will appear there, will pretend to look like legitimate customers, and will try to steal some of our money, so reduce our revenues. But another point which is important is related exactly to this customer experience is minimize friction. So when you have digital process, the more steps we'll implement there, especially related to the customer identification, authentication, we will be reducing number of clients, because clients will be dropping off the process. When the customer see that the process is too complex, he or she will decide to leave. I can give you an example of my personal example. In my previous company, when we also were developing digital onboarding process, me and my colleague from Poland, we divided between us all banks in Poland, and we started downloading all the applications and trying to open the account there to see how each of the bank has the digital onboarding process implemented. In many cases, I was reaching the point, especially at the identification element, when I was taking a picture of my document and a picture of my face, and the process was stopping, was throwing some errors, was not going forward. So after several tries, I just dropped the process. So friction and customer experience really important, especially also taking into account the fact that more and more younger generations are entering to the market. And now what we are developing, the services which are developing, we are also developing for them, for the younger generation. We can come back later to your question about merge of businesses between banks and fintechs, because I think that for the younger generation, this is a perfect example. And on top of this, when we are talking about digital onboarding, the processes where we have to collect personal data, take a picture of a person, authenticate properly, so using the strong customer authentication, for example. We always are meeting a regulatory request for the regulatory compliance. And here we have two types of regulatory compliance. As I said, we are a global company, so we have those European, if you are considering our region, we have those European regulations, but also every country has some specific regulations implemented. Those EU regulations translated to some way in the local ones, a little bit different, some specific, so we need to be compliant with those regulations. If we consider the typical digital customer journey, I would even probably risk the statement that in every case, so in every business, we have several key steps which are common for every journey. So verify customer ID, identification. So we need to somehow verify this person, no matter what channel it is. No matter what business it is. We need to sign a contract with this person, and we need to somehow onboard this person to the service. So enroll the credentials, and then allow this person to use the service properly authenticating. So what we do at OneSpan, we help our customers building their digital journeys, offering identity verification, authentication, fraud analysis, mobile security, and e-signature solutions. How we do this? We do this, in the past we were doing this using independent elements of the independent solutions, because as I mentioned, OneSpan was growing through the mergers and acquisitions. That's why at some point company came to the conclusion that having completely separated solutions, it doesn't make sense. We need to unify them. And we created a unified platform called Trusted Identity Platform, where all of the components, elements which we're offering are integrated with one platform, where the customer can take a decision whether to take the whole platform or maybe just some elements of the platform, because we know that, especially these days, a lot of customers have processes already implemented, but considering to add something or replace something depends on the current situation. And the last slide, because I'm talking quite a lot, but there are also some agencies who can tell something more about our company, like KuppingerCole, Forrester, Gartner. We received very positive scorings and ratings from those companies. So it's not only my subjective opinion, but also it is quite objective from the market, from the research agencies. So that's it from me at the moment.
Perfect. Thanks a lot, Pьотr. So now we're back to our full table discussion here. And our main topic are payments and the customer journey. However, if we look at the broader picture, We're talking about different companies who do different things. For instance, banks are more focused on one thing, fintechs on other sectors. Fintechs, for various reasons, are at the forefront of the three core services a financial institution can offer. It's payments, then deposits, and then credits. One particularly interesting fact I found online on Statista is that for those who have discontinued their bank application, 87% of them, according to Statista, stated that the reason for doing so, discontinuing their bank application, is the lack of long-distance KYC. 87%. And this, I think, was published right before COVID. So we're not even talking about times of COVID. I'm going to open up the discussion and include people from the public. How often do you think companies whose products or services you use test their products and services? Be that banks or fintechs, it does not matter. We're not trying to make a distinction between the two. We saw that they're working together. How often do you think companies should test their products if they don't? Anyone? Anyone from a... Yep.
How many of these companies are...
Your mic. Guys, can we get another mic, please? So in the meantime...
So my question is, how many of these companies are considering the customers when they're designing this process?
Exactly, how they come to the conclusion that this product is going to be a product fit. Okay.
So that's a step before the testing, and how they are considering the customer feedback and the customer role in the design process.
Does anyone want to jump in on this from fellow panelists?
But what we mean by testing? So testing the functionality?
You can test your functionality, you can test whether you're working towards a product fit, meaning that if you're offering something like Apple Pay before anyone else has started offering it.
So in general, I would say that probably after every release they produce, but it should be also from should be some kind of tests which are done permanently to verify not only whether the product works good from the requirements point of view, but also if it fits to the customer experience, for example.
Yeah, absolutely. To be fair, so when we talk about these product fits, and there is this notion that certain products that are used quite intensely, they're the best products on the market. And this is a huge misconception because they might be the only product on the market that is being used. So there is a huge difference between product fit and customer preference. And I think in this world right now, 2 years ago, it was a little bit trickier to define what was a product fit and what was a customer preference. But right now, the market has matured. We can see who are the main players from, the advancing traditional banks. Those banks that have completely redesigned their channels and the way they communicate with their users. And we can see those wallets that have found their way into people's mobiles. One thing that I find particularly interesting is the so-called product culture. We're going to be focused on this quite a lot because the panel is about customer journey, and when we talk about customer journeys, it is important to talk about data. Products are tested as ideas way before they're published, and I fully agree here with Detelina. And the only way to verify those ideas is when you continuously track how your users interact with your product. As Pьотr mentioned, when we're talking about friction, meaning that any sort of resistance when the user is using a given product, that is bad. I wanted to raise a particularly interesting question when we talk about product friction, and it's about customer support, because it is a particularly interesting aspect of the customer journey. And to open up the discussion here is, what's the best customer support you could get out there?
In the customer journey?
Yeah.
We had recently discussion panel on this. No, maybe panel was about customer journey, but there was a topic which touched this, that at the moment, everyone is concentrating on on developing the customer journey with a great customer experience, but there is very often lack of possibility for the user to contact someone during the process. Like, for example, when I gave my example, that I was unable to scan my document, so at least to have a possibility to go for a chat, to make a call, but from the process, not leaving the process and trying to find somewhere on the internet contact details, but chat in the process available to reach the consultant asking, I stuck at the certain point, could you please help me?
Or the opposite. I'm working a lot recently on some tech projects, and there is always the hybrid model. When you cannot accomplish the complete digital journey by yourself, you should call a call center. And people are calling the call centers. And I was, okay, let's keep this phase. And the customer was, no, we cannot do this. We will lose around 40% of our customers. Customers are not able to accomplish the digital journey.
To answer to your question and contribute to what colleagues have mentioned, the best customer experience, the best customer support is the one that comes when you need it without the need to look for it. There are a lot of solutions that can trigger the agent to call you with a priority and ask you, is everything okay with your upload? To call your insurer instead of you calling them and say, yeah, we see that you have just finished the stuff, let's finalize it. So in my opinion, it should be proactive from the company. Otherwise, they're losing all of the investments to bring the customer to the solution, whatever it is, to the channel, guide them through the workflow or whatever, and they lose it at the end, right before tightening up a longer relationship.
But I'd like to bring the topic a bit like few steps back. When we started discussing the testing, the design process, and thank you, Marina, for mentioning how capable are some part of the customers to do everything by themselves. And I think it's very important to mention that a lot of companies are still considering the customer as one sole thing, when the customer is actually formed by many, many different people with different level of understanding, with different habits, with different lifestyle. And I'm pretty sure that for the majority of the currently active and successful fintech or even bank companies and organizations, it's very difficult to segment and to identify who their customer is, what is the exact profile of this customer, and how to service this profile better, and to select, I prefer to service this group of customers, or I prefer to service this group of customers. Of course, in the banking segment with hundreds of years of experience, it's way different. But for the fintech industry, it's something that I think there should be an open discussion for it, because the development departments are still considering the journey just from a single perspective, and the service from just a single perspective, when there are different needs to be catered for.
I fully agree with this, and to be honest, to evolve into a more broader topic about customization in general, because when we talk about products and users, a major aspect of having a good product right now is giving the users the ability to customize what they're using right now. And this goes for both banks or fintechs or whoever can make a difference right now. The degree of customization, for instance, in Western countries, is significantly high to such an extent that even if you're using a traditional banking application, you can still choose exactly how it's going to be rewarded. You can cherry pick which functionalities you want to have, etc. And the only way to achieve this is exactly when you test and when you see what the customer wants. Because right now, when we talk about data, we always imagine it as information. However, data is both an information and a pathway. It's a pathway to get to your customer and get to know them better. When we talk about customization, how do you guys see this process here in Central and Eastern Europe? And I'm asking you because, to be fair, here, when people talk about banks lagging behind, I could also have the argument that huge fintechs do not localize their solutions to a great extent in these areas, which gives them a level playing field. How do you think both large or small-scale fintechs or banks are doing with customization here?
Me? Okay.
You want to start?
Customization is crucial, and even if you have a global product, it's a must to customize it for a special market or for a special group of people. And we're even joking with my colleagues that we dream for the moment when it will be possible just to switch. We open one product application, but you say what kind of experience you choose. You would like to go for innovative, you would like to be a pioneer and to do everything digitally, or you are more a traditional one and you switch and go for a more traditional way. But this is one of the main trends.
I have an experience that I want to share. I'm having a crypto platform over there, a super powerful one, much better than all the wealth management apps I have used. And they're having a very basic thing. Are you going to enter as an advanced user or as a basic user? And I can change it every single minute. Advanced user, it makes me dizzy. So many functionalities, it's brutal. Basic user, you can add manually some of the features that you want, but pretty much it's for the basic people. And probably this would answer the question about the local mentality, because everything that we discuss, UX, penetration of payments, whatever the alternatives are, I think it's the end of the day, it's based on mentality. So we can design at least a couple of customer journey, give the opportunity for each and every customer to customize its customer journey. And of course, it's going to be super expensive, but I think this is the answer. And this is where everybody will go for, whether banks or fintechs, et cetera, they must allow further customizations.
Absolutely.
Yeah, quite a broad topic. May I?
Yeah,
Just one comment?
Yeah.
Because I would probably say that it really depends on the situation and should be considered case by case. If we, for example, need to adopt a product to the specific local requirements, so no question, right? Should be possible to somehow to customize it. But a product which you take off the shelf is something what you can very quickly and cheap implement. So sometimes customization requires months, very long projects, months or even years, right? So depends on the case. If you want to have something quickly, a quick product implemented, so it's better to go for the ready solution, and maybe afterwards to consider to apply some changes when we start using it, right? So that's why I would rather say that there is no binary response for this question.
But also, I'm sorry that I'm extending the time.
No, please do.
I think it's, just another aspect on what has been said so far, because we do consider customer to be the focus of any sort of innovation, right? I mean, from the discussion as it went so far, it seems so. And I'm just curious how much the customer's behavior really has an influence. I mean, the established behavior has an influence on innovation, or whether the innovation and the different approaches and the different services that the companies are offering are changing the customer behavior, and how this is maneuvered within the different organizations.
I think this topic is particularly interesting, and when we talk about this sort of innovation, I think the right answer to it is whether we are talking about first principle rules innovation, or it is something that is based off what we have currently seen from the infrastructure we have in front of us. So when Steve Jobs conceptualized the iPhone, his idea that even till today, regardless if you're with an iPhone or not, we don't have much buttons here, do we? That's exactly what he did. He reconceptualized the entire idea, what a phone should look like. And I think this is an example of an innovation that is customized for the end consumer. However, it is quite imposing in the sense that we will keep on using this sort of design for years on end.
But it's more or less the same with the digital money.
Absolutely.
And how people are now transitioned by the companies and by the fintech companies mainly, from using mainly cash into using digital currencies and using digital and online ways to move money around.
Frankly, when I read an interview from one of the co-founders, I think of the same platform Jordan was referring to, the same crypto platform. She, the co-founder, not CZ, she mentioned that at the base of their understanding is that the customer is incredibly smart. And a lot of companies view the customer as a consumer. However, the customer is very smart. Once you trick the customer into doing something they do not like, that journey could be the end of them using your service. And I think that constantly checking how your customers respond to new features or services or redesigns is absolutely critical to producing a satisfactory customer journey. Do we have any questions from the audience? Just a quick one or two. Yeah, we've got one right over there.
Hello, my name is Asia, and I come from a consulting company that's been working on workflows and designing customer journeys. So I just wanted to comment on the customer support, because we are talking about call centers and about customers calling us. And I can tell you that being a customer of a bank for many years, this is something that really ruins the whole experience if you get to the call center. So what I wanted to share is that I believe the whole ecosystem needs to think about more how to use predictive analytics of where the friction comes in their customers and invest into proactively solving all those issues that can have an impact, rather than the user going and handling an issue. And from the more modern payment providers, I don't see this as an issue. Like, I don't have to call Revolut that often as I need to call my bank, for example. So just putting it as a thought that when we're thinking about customer journeys, we need to think about what the customer really wants and have as a friction, and then not go from the product towards the customer. And we do have also the technologies available now. We have AI, machine learning, that can help us analyze this huge set of data for customer behavior and preferences and friction points. So it's what I see is an opportunity to really think more creatively as a whole of the ecosystem, how to really utilize the available technologies in the next step. So if you can comment on this, I just wanted to share my experience so far.
Anyone?
Yeah, a great comment. Definitely, the question is that we go back to the technical literacy, and is the market ready for something or not? And we have the exact problem here. Young people are trying and going for new technologies and new products, and that's awesome. They're brave and they love it, and it's natural for them. And this is our main goal, also our job. But there are certain traditionalists. It's extremely difficult to change their behavior and state of mind. And that's why we, for example, as a company, always go for some hybrid solutions, and just to find a way to make all these target groups happy, because otherwise you're losing the majority of the people. So this is more or less, but also as a company, you should target the product really well. So I was talking about happiness, but I'm sorry, in real life, no, it's not possible to make everyone's happy. So yeah, it's a question of balance, I think.
This brings to mind a particularly interesting quote from a friend of mine. He's the vice president at a Danish customer support company. He once told me that customer support right now is automated enough. It is not human enough. In the sense that wherever automation is possible, it's obviously good to utilize that. However, when you're actually interacting with a person, that person should not be working 12 hours a day or something like that. They should be able to utilize technology in order to work only 4 hours, but from those 4 hours, they should be focusing on things that technology cannot solve in any way. Which in one way answers one question that we had during the first panel, whether we're going to start firing people if we automate all the customer processes and everything. No, it's about the synergy between customer support and automation.
But also what comes to mind now is how ready we are, like overall, to use big data and to use these capabilities and possibilities which technology and accumulating the data is providing us, because it's still, how to say, I mean, yeah, the tools are available, yes, machine learning is available for several years, but how advanced is the use of this is still a question.
Yep. If I might add,
Yep.
we are not at this stage to use machine learning for that. We are at the stage to utilize a super simple rules creation, but large or even simple organization, they prefer to use this particular talent, because these people are rare, for marketing automation purposes. It's the very same person that should pretty much trigger to the call center agent. There is something wrong with this journey, or we need to call this guy for this or that, and should be proactive. But as the talent is scarce, at the end of the day, we utilize this particular person for the position where we are going to gather more benefits out of it. I think it's mentality and talent that are the greatest bottlenecks for us moving forward.
Any other questions, guys? Last ones. Okay. I suppose we don't have any. If anyone else wants to add anything to the discussion before organizers started throwing tomatoes at me.
Thank you, Edward.
Okay. Thanks a lot, guys. It was a pleasure, and talk to you in a bit.
Yeah. Thank you.